morning, guys. Thank you for tuning in. It's been a while since we guys connected. And my excuse, tax season, kind of valid, I hope so. Um, this one was extended one, just like last year. Not as long as last year, but still enough, and was busy to say the least. That being said, it's behind. I had a 1 week, kind of got myself back, and now into the routine. The video that I'm going to, the topic of the video that we will focus today is something I'm working on my own clients as we speak, and that is the hot employee retention tax credit. Now, this is, it doesn't apply to Schedule C filers, so if you are one of those people who are Schedule C filers or were thinking this will apply to you, as of right now, unfortunately, the way this works out, you are not qualified. You would be okay if you have W-2 wages in terms of employees that are on W-2, not including you. This would be perfect, but if you are yourself the only employee of the corporation, be it S Corp or sole proprietor, unfortunately the ERTC does not cover you. So we will be discussing it for other companies that have corporates who have W-2 employees. So let's begin. ERTC, or Employee Retention Tax Credit, is all over the news right now. Everyone, a lot of my clients want to know, they want to make sure that they don't leave anything on the table, and we are making sure that it happens exactly like it is. That being said, this video is going to be an overview of how this works, only because it is not as straightforward. There are a lot of calculations at the back, and so it's not something you may be able to do by yourself. You will need a professional who would have to run these numbers for you. The sole motive of this video, let's put it this way, would at the end of it be to give you an idea of what it is. You should be able to kind of get an idea if you yourself qualify. So let's say if your CPA accountant or whoever does your books hasn't approached you, which honestly they should, that's, due diligence on their part. But if they have not, you should be able to figure out whether you qualify and then reach out to them and see if they can help you do this. To begin, this is a very lucrative credit if all is done correctly. This is basically worth $7,000 per employee per quarter. I'm going to repeat it again, $7,000 per employee per quarter, which is a decent amount. It's not something to play with. The reason this has become a bigger deal than earlier was because there were few restrictions. One, if you took PPP, you could not take ERTC credit. This is before the amendment came through, not right now. But also the fact that in 2020, the whole point of this credit at the end of the day would have been $5,000 per employee. On the other hand, as it stands today, it's $7,000 per employee per quarter, which could be translated into $28,000 compared to 2020, which was $5,000 for the year. So all of a sudden, there's a huge difference of what it is that is on stake. Secondly, you could take this with PPP now. Earlier, you could not do it. Earlier, companies only with 100 employees qualified. Now we're looking at 500, which is a lot more of corporations out there, and a little less stringent qualification. Earlier, if you had to do it, you needed, for 2020, you needed 50% decrease in gross receipts, or your business had to be completely and partially shut because of pandemic reasons, which was a lot of these restaurants, salons, and businesses like that. Some of them were still open, but at least these businesses were closed. So they qualified, even if though, let's say their receipts may not be 50%, they would still qualify. On the other hand, a lot of service industry or sort of a lot of other businesses, 50% is a much bigger gap to fill, so they may not qualify under those categories. But in 2021, the eligibility was much more relaxed. We are only looking at 20% decrease in receipts. I'm going to make it kind of more on a streamlined basis, starting right now, in terms of how and what are we looking at. Most of my clients, I am not looking to do 2020, just for the fact that they were either not closed completely or partially closed for the pandemic. And even if that be the case, they did not get 50% decrease in their business. So they kind of don't qualify. And even if some of them did qualify, well, they took PPP. And the way this works is you cannot double dip the wages. So if you already have utilized enough of your wages for your PPP forgiveness, now you can't use it for your ERTC credit. So between all these factors put together, 2020 is not something that I am pursuing. I may have like one client that we may consider because for whatever reason they did not take the PPP, so it may make sense for them, but most of them did. And with all the numbers, the way it all works out, it's not going to be much of a headache. So worth the headache. That being said, let's focus on 2021 because that is what I am working for. 2021 is, like I said, easy to qualify. 500 employees business, you still qualify. You only need 2020, between 2021 and 2019, 2019 being the base period, you need 20% decrease in your gross receipts to qualify. Much more reasonable, much more realistic than otherwise. So it depends. At the end of the day, we do have businesses that have a 20% decrease in their gross receipts compared to 2019 in the same quarter. And even though they did take the PPP, they have enough wages which will make them qualify for this credit. Now, keep in mind that you cannot double dip again. So when you apply for forgiveness, and that's where I mean, I'm not going to put any numbers up because this is not something which is as simple as I can explain compared to some of my earlier videos where you could make sense of it. There are many factors that come into play. And so I just don't want to make a cookie cutter thing because at the end of the day, it will specifically depend upon what your situation, your numbers, and the scenario looks like. So that being said, all you have to worry in terms of your qualification is just look at your quarter to quarter from 2019 to 2021. If your numbers from Q1 2019 to Q1 2021, respectively Q2, we're not really done with Q2, but it's not a big, it's only 20%. So maybe you can take a guess whether you are at that 20% decrease or not. So that may be something you may have to wait for another maybe 2 weeks to get a better idea. But basically compare the 2 quarters and the 2 years. And if you have 20% decrease in receipts, you may want to reach out to your tax professional or whoever, maybe your payroll provider, if they have the service, and make sure that you look into these calculations. Like I said, there is a lot more that goes into getting your exact numbers. There is a cap, it's $10,000 per employee. So if you do have someone who was paid for the quarter more than $10,000, you cap at $10,000. Technically, this is 70% of your quarterly wages up to $10,000. So you have an employee A who was paid like $7,000, it's 70% of $7,000. You have someone who is paid $10,000, you're looking at 70% of $10,000 at $7,000. On the other hand, you have someone who was paid $14,000 for the quarter. Again, the cap will be at $10,000 and their credit for the quarter still stands at $7,000. So between all of these calculations, again, the wages that are used for qualification of these cannot be the ones that you used for PPP. So how you utilize your PPP is, in terms of your forgiveness, is extremely important. You may want to use rent more towards it, some of your other operating expenses. There is a lot more you can utilize towards PPP so that you can, let's say, free up your payroll to qualify for this and not have to worry about double dipping on your wages for ERTC. That being said, also these businesses, the way this will work is there's not so much as what the IRS guideline, there's no specific guideline from the IRS in terms of work papers that they want or your calculation. All they request from you is for you to keep whatever documentation you used to come up with this credit to keep for 4 years. So that's where you have to make sure that the documents are at least with you for 4 years as to what and how you came up with your credit. This has to be in combination with your payroll because at the end of the day, you can use a credit towards your payroll tax credit against the deposits that you make for on your payroll returns, the quarterly returns that are filed. So if you have the same accounting firm that probably does your accounting and payroll, it's easier. It's one place. On the other hand, if you have a firm that does your accounting and may help you with these numbers, but you have maybe ADP, Gusto, or whoever you may be using for your tax, for your payroll, they may have to be informed in order for this to properly work, so that they make your tax deposits, the payroll tax deposits, in accordance to the credit that you may otherwise qualify for, and hopefully you will have a decent credit. This is a big enough credit. Think about it, even if you have 10 employees that are at $10,000, that's $7,000 per employee at $70,000 for the quarter. It can add up big time for some of these clients, and I hope if you are one of those that you get to benefit from it for sure. I hope this ERTC credit umbrella made sense to you. If you have any questions or concerns, please do put it in the comment section below. I do check them, and I will be more than happy to reply or answer. Again, like I said, there's a lot of different factors that play into this number, but I can certainly guide you or hopefully answer some of your questions if feasible. Again, if you follow me, I do like to end my videos on a positive quote. And here it is. I got this one from Vince Lombardi, and it goes like this. There is only one way to succeed in anything, and that is to give it everything. With that, you guys have a great day. I'll see you again in my next video. And